Welcome back to the exchange. UBS estimating tariffs could raise the average cost of building a single-family home by nearly $8,000. That's after the president's announcement last night, which included raising tariffs on Canadian exports to 35%. Those went into effect at midnight, while other countries' tariffs take effect in a week. Could have a big impact on lumber prices. Joining me now is UBS analyst John Lovallo. John, your estimate had been a little lower, now pretty close to $8,000 cost. But how does that shake out, given that new homes, there's room for different kinds of incentives versus existing homes where inventory is starting to stack up a bit?
Yeah, let's break it down. So of that $7,900, about $6,300 is reciprocal tariffs from different countries. About $1,000 is from the Canadian lumber tariffs, stepping up from 14.5 to 35, and that's from countervailing and anti-dumping. And then about $550 is from copper. Now, keep in mind that that's about 7.6% cost increase for an average family home. But there are offsets. And to your point, there's a couple of things that the builders are doing. One, they're buying down rates, which is helping on the affordability equation. But I also think that there's important offsets on just the cost side. Think about it. One, the builders are not going to shoulder all of this cost. They are now, the top 16 builders are 50% of the market. They are going to push back on the value chain. So they're not going to be shouldering the vast majority of it. On top of that, if you think about the fact that you'll have the opportunity for some of this cost to actually get shuffled to not only the other players, but across other industries as well. So
does this put the luxury builders, the ones with the best reputation, in even stronger position? Because, I mean, you need wood whether you're buying a cheap house or an expensive one, and it doesn't cost any more to build the same size expensive house as cheap one. So if you can get margin on various other things, and maybe your buyer doesn't notice as much?
Yeah. So what I mean by pushing it to other industries, and that's exactly the point, is that 25% of lumber comes in from Canada, right? Now think about it. The U.S. Lumber Coalition has said, look, bring it on. We can handle 95% of what is being produced in Canada domestically. Our mills are running at 60 to 65% capacity utilization. On top of that, Trump has already announced an executive order to cut down 25% more timber. So there are offsets there, and the builders can build smaller homes a little further away from the city centers, that the existing home market cannot do, which just makes it much more competitive to buy a new home.
So do the valuations of the better positioned luxury builders reflect that reality? And do the valuations of the builders who are perhaps not as well positioned also reflect their situation?
I think it's going to be a rising tide lifts all boats to some extent. We like the entry level to the extent that that is the most need-based buyer out there. So to the extent that they can buy a home, they will. There's a $68 trillion wealth transfer that's happening in the U.S. today that's helping these buyers. Now, the luxury buyer has the luxury, if you will, of not having their buyer need to rely that heavily on rates. 25% of these buyers are paying cash. And so I think that, look, valuations across the board are still very punitive, in our opinion, have a lot of room to expand. But I think it's going to be sort of a rising tide lifts all boats.
Quickly, is there any change in the existing home market that could throw a monkey wrench into this picture?
There's been a little bit of inventory that's built up in certain markets, for sure. There's no question about it. But keep in mind that this inventory is old. It's 44 years old on average. It's generally not at the right price points. It's difficult to insure. And the rates can't be bought down.
John, thank you.